The best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian. I will take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares moved higher amid mixed trading in the region. So if we look at the Straits Times Index, it was up 0.54% at 4,184 points at about 12:53 p.m. Singapore time. And that is with a value turnover of some 607 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market fared. The STI closed up 0.67% at 4,189 points. In terms of value turnover, that's 1.57 billion Sing dollars. Gainers outnumbered losers 430 versus 147. Top advances for today, we've got for you GMX USD, DBS and OCBC. Top decliners, we've got ASIAS, UI and HOQ. Now in terms of counters to watch, we have Food Empire because the group today announced its partnership with Santan Food Services, which is a brand under an AirAsia unit, to co-develop and launch a range of ready-to-drink beverages. Now elsewhere, from more on Netflix's latest quarterly earnings to how the US Commerce Department is imposing preliminary anti-dumping duties of 93.5% on Chinese imports of graphite. We've got more corporate and international headlines in focus. And joining me on the line today is Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome back on a Friday.
Hi, how's it going?
Good. And Ben, let's start with the Singapore stock market this time around. How did the STI fare today, and how much of this is boosted by a rally in DBS shares? I believe it hit an intraday record today.
Well, certainly the SIAS Index, closed up today. If you look at the weights of the three local banks, they make up about 55 to 56% of the market cap of the STI Index. And as we know, the STI Index is a market cap weighted index. So obviously, if the banks are doing well and they reach, historical high for the market cap, then that will, lift the entire index up. So the banks today did well, DBS did well, but far and away, and we're going to be talking about this later on, OCBC did really well. I think it was up about 1.4%. So as a general, in general, that of course uplifted the entire index. And, from a more broader perspective, financial institutions are generally seen as a proxy for the health of the local economy. So if the banks are doing well, it suggests that the local economy is doing well. You don't have the huge problem of bad debts or, companies going bankrupt, so on and so forth. So that certainly does not hurt the broader market index. One thing that was interesting, moving away from the financial institutions, is that offshore marine did pretty well. So you got Mermaid Maritime up today. Seatrim itself, a very large company, up about 5.8%, or close up at 5.8%, probably buoyed by news that delivery of a vessel that they had produced for Petrobras is imminent. So that's all good. So it looks like they are, delivering products that's on their order book.
Okay, and Ben, let's zoom in on some of the counters to watch. We have Food Empire. After the group today announced its partnership with Santan Food Services, which is a brand under AirAsia unit, to co-develop and launch a range of ready-to-drink beverages. How significant of a move is this for Food Empire, and how have investors reacted to the news? Because I know they are looking at also launching these products on some of the flights. You can imagine on a budget carrier, someone just orders a drink and everyone smells it. And, what do you make of the move?
It's obviously a net plus for Food Empire, simply because AirAsia has got it represents a huge distribution channel, right? They've got hundreds of flights, thousands of flights per year. And of course, from the news feed, it looks as though the drinks are going to be offered, as a paid service to flyers on the flights as well as selected ground venues. Now, if you look back at the stock itself, the current PE ratio is 16.6. That's based on today's numbers, which is much higher than the 5-year average of 9.42. One analyst actually compared the current PE ratio as 3 standard deviations away, which is a very rare event. The price to book is almost 3x. And so from those ratios itself, you can suggest that the stock is relatively expensive. But it may be justified if the AirAsia partnership results in significant uplift in both revenue as well as profit for Food Empire. Looking at the market move today, the smart money really likes the deal. So CGS Research has upgraded the target price for Food Empire to $2.70. They actually upgraded the price actually 2 weeks back. Yesterday they upgraded again. Now it's $2.70. The share price closed at $2.26 today. That's actually a jump of 6.6% in 1 day. But of course, if the market consensus is aligned with the latest research coming out, then obviously we can see further upside potential.
Okay. And another counter to watch for today is OCBC, Ben, because OCBC inked 12-month-long collaboration agreements with NUS, SMU, NTU, and it is also working with Singtel and the MAS to explore the application of quantum key distribution. Now, how would you read into the moves by OCBC? How have investors reacted to the news then?
Well, I guess for some of our listeners out there who are not so sure on on what quantum computing is, so a little bit of background. So if you look at the current computers that you have, or rather even your PS5, right?
Yeah.
They run calculations sequentially. So yes, contemporary computers have got, or CPUs have got things like 6-core, 8-core, but that basically means that parallel processing is mainstream, but that simply means that the computer is doing slightly different things at the same time. But if you're running a long chain of calculations, it's normally done sequentially. Now, quantum computing actually kind of turns that on its head, so it's the next holy grail, and really represents a fundamental leap in how computers actually work on calculations. The technology itself is nascent, but really has got a lot of huge potential. And then you have got some academic research that's coming out. I think in China, somebody has broken a 50-bit RSA cryptography using quantum, but of course 50-bit is kind of like lightweight. So don't worry, they're not going to be hacking into your ATM anytime soon. So the current news that OCBC is collaborating with the three big local universities is all good. And of course, if you look at the topics, right, derivative pricing, fraud detection, data security, all these are the kind of sectors which a modern bank will be very interested in. So just to kind of put this in perspective, the announced projects, with the universities, generally they are what we call proof of concept, right?
Yeah.
So it's not production, it's not commercialization. So we don't expect any kind of material uplift or any kind of new products resulting in this collaboration anytime soon, or rather, not for the next 12 months. But the stock price is actually up 1.46%, I beg your pardon, which is outpacing which outpaced DBS as well as UOB. Can't say for sure that the stock price performance today is solely due to this news, but I think certainly it doesn't hurt the financial outlook of OCBC.
Okay, now from OCBC, Ben, let's switch gears to look at Wilmar International. Wilmar International has agreed to acquire up to 20% of the shares held by India's Adani Commodities in a joint venture between the two companies. Now, this comes as Adani Commodities announced its exit from the JV in December last year. Is there anything new this time around that investors should keep in mind at this stage?
I think it's a fantastic move from a business model perspective. So the joint venture is called AWL Agribusiness. It is actually India's largest consumer foods manufacturer. And, it's been there for, I think they started the JV, 1999, somewhere around there. So, of course, after 2 decades, great brand awareness with Indian consumers. So if you zoom out, India is obviously a huge population. It actually has got more people compared to China. What is better is, of course, it's got a younger demographic and it's got a steadily growing middle class. So Wilmar is Adani's JV partners. Presumably, Wilmar would have had the right of first refusal. So makes a lot of sense for Wilmar to basically buy out Adani's stake. So if you look at the deal, right, once it's done, Wilmar will own 64% of AWL, so that's almost 2/3. And of course, this is just buying out an existing stake. So the operations are there, the business is already there, products are already there. So, we're going to have an almost immediate uplift in revenue and profit going forward. And obviously, the market loves the deal. So Wilmar is already closed up 2% today.
And, across the region, Ben, let's have a look at what's going on in Japan. Japanese investors, they appear to be a little more anxious than those elsewhere in the region. In fact, Nikkei closed down 0.17% today. That's after news emerged that rice prices once again doubled in June. And that compounds problems for Prime Minister Shigeru Ishiba ahead of elections on Sunday, I believe, which grain has been a hot topic. Rice has been a hot topic. How far have political uncertainties and the latest inflation numbers weighed on equities in Tokyo as well as the Japanese yen?
Well, the June headline inflation is 3.3%. Is actually a little bit better compared to May's 3.5%, but obviously still far, far above the Bank Japan's 2% target, almost double in fact. So of course, rice is a staple, food product in Japan as well as in Singapore, most Asian countries. So the doubling of rice prices is certainly a big issue. Definitely one of the things that is going to impact the outcome of the elections. So, to put things in perspective, the current government, basically LDP, right, has got a coalition partner. So together, they actually have got a slight majority in the upper house. So in the upper house of the National Diet, we're going to have elections on Sunday, right? So they are likely to lose the majority. And considering the governing coalition already lost a majority in the lower house, it's going to be a lot more difficult for the current government of the day to pass legislation. I think the market is kind of taking that into consideration. So you think that lower inflation, will lead to a slightly strengthening Japanese yen. That didn't quite happen. So the Japanese yen, if you look at today's trading action, it continues to weaken as of this time against its major currencies, predominantly the euro as well as the USD. So the perception from market is that government reforms are probably going to get stuck. The Bank of Japan is still struggling to contain inflation, and therefore the trend of a weaker Japanese yen is likely to continue. So, going to, again, Japan for the school holidays.
Okay, and if you're just tuning in, we're in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, further away, Ben, the U.S. Commerce Department, it is set to impose preliminary anti-dumping duties of 93.5% on Chinese imports of graphite. Now, graphite, for context, is a key battery component, and that is, of course, after concluding that the materials had been unfairly subsidized. Any thoughts on the move and share price movements relating to battery suppliers and graphite producers today?
Well, as you pointed out earlier, the new duties plus existing tariffs mean that the effective tariff is about 160%.
Yeah.
So, if only our salary increment was 160%, that would be nice, right? Okay, so the market has already moved. If you look at the stock prices of Australian, Canadian, and even South Korean graphite miners, they've already surged. The challenge is this, right? If you look at the U.S. Geological Survey, the USGS, this is basically an arm of the U.S. government. This department has already stated that the U.S. has not produced any graphite since the 1950s, so you don't have any kind of mines. I think they're trying to start new ones, but the problem, of course, is that if you replace cheaper graphite production with, in the meanwhile, with more costly imports from other countries, then, of course, any kind of product, higher up in the value chain that uses graphite is going to cost more. So predominantly, we're talking about the cost of battery production, specifically EVs. So ultimately, if batteries in EVs are more costly, then the sticker price of EVs are going to be more costly as far as the U.S. is concerned. So, of course, I'm looking at you, Mr. Tesla. Doesn't matter to us in Singapore because we are very interested in BYD. But, of course, if you're an American or you're in the U.S., you're going to buy a car, EV is going to be more expensive.
Okay, and finally, Ben, we must wrap up the conversation talking about Squid Game, or Netflix rather, because Squid Game helped Netflix beat Wall Street earnings targets for Q2 as the streaming service raised its revenue guidance for the year. And just to bring out some numbers, for April to June, Netflix posted diluted earnings per share of $7.19, and that topped a $7.08 consensus estimate of analysts polled by LSEG. How far were the numbers, though, in line with your expectations? Because some analysts, they appeared to be expecting more.
I think Netflix has got the same problem that Nvidia has had in the last 1 year or so, because when they put in great numbers, there's always an outlier that says, yeah, you could have beaten it even more. So certainly Netflix beat expectations on both the top line revenue as well as the bottom line earnings per share. What was really nice was that the operating margin came in at a record-breaking 34%, which was itself up from last year's 27%. The stock price still took a hit, so as of about an hour ago, the stock price was down about 1% in aftermarket trading session. So that's not bode well for this evening's trading session, but we'll see how it goes. Of course, there are some explanations for this. If you look at the Netflix stock price, it's already up 43.7% year to date, far outpacing even the darling, which was Nvidia. The company itself has also guided that operating margin is probably going to come down in the second half because of higher sales costs, higher marketing costs, higher cost for amortization of content because they produce their own shows, so on and so forth. Mm-hmm. And the company has also flagged, consumer sentiment as a risk factor given the existing economic uncertainty. If you look at the consensus, analyst consensus is that the stock price is already fully valued, so there's not much of an upside. But I think if you look at the company from a business model perspective, I think there are opportunities because I think earlier this month, or was it last month, I was given an email notice that my Netflix subscription fees has gone up again. I think they do that periodically, so they can always up the price once every few years. Okay. And of course, they can the company can continue in its global expansion, penetration of other markets. And of course, they also have got the ad-supported tier. I don't believe it's available in Singapore, but globally speaking, they already have 94 million global monthly active users on that tier. So one U.S. analyst has also forecasted that the advertising business might actually bring in about $10 billion revenue annually by the end of this decade, which is only another 4.5 years ago. So I think the company has got a lot more opportunities to support its share price. So I don't think it's a done deal.
Okay. Lots to watch indeed, and perhaps watching Netflix something to do over the weekend as well. Thanks so much for the insights, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.